Hello, and welcome to the Federal Home Loan Bank of Cincinnati's webinar on our newest program, Rise Up. This webinar will cover an overview of the program, including eligibility requirements and where members can access resources to use the program. My name is Catherine Conklin, and I am a part of the Housing and Community Investment Department at FHLB Cincinnati, and I will be your guide through this webinar today. So this is just a disclaimer. This presentation may contain forward-looking statements that are subject to risks and uncertainties, including but not limited to the effects of economic market conditions on demand for the FHLB's products, legislative or regulatory developments concerning the FHLB system, competitive forces, and other risks detailed from time to time in FHLB's filings with the Securities and Exchange Commission. This forward-looking statements speak as of the date made and are not guarantees of future performance. Actual results or developments may differ materially from the expectations expressed or implied in the forward-looking statements, and the FHLB undertakes no obligation to update any such statements. All right, now that is out of the way, so our Rise Up program webinar agenda for today is outlined here. And we'll be exploring these more in depth over the next hour. So to start with our background on the FHLB system and FHLB Cincinnati's Housing and Community Development Department. FHLB Cincinnati is one of 11 federal home loan banks throughout the country. FHLB Cincinnati in particular serves the states of Ohio, Kentucky, and Tennessee. The FHLBs are banks of the banks, so we are essentially a cooperative made up of our members to serve our member banks. This slide here depicts FHLB's mission and a list of the primary products FHLB provides to our members. FHLB generates income from advances, letters of credit, and our mortgage purchase program that we then funnel into the affordable housing program, our welcome home program, and our voluntary programs, which now includes the Rise Up program. The Housing and Community Investment Department of FHLB Cincinnati exists specifically to administer the program, such as our affordable housing program, our welcome home program, and our voluntary and pilot programs, such as the Carol and Peterson Housing Fund, our SECA program, and as you now know, the Rise Up program as our pilot program. If you're interested in information about any of the other programs that FHLB offers, you can find details and application instructions on our website at www.fhlbcin.com. Be sure to access our public website for information on these programs, not the members-only portion of our website that you may be more accustomed to using, although the applications for the programs do exist in members-only. For those households viewing this webinar, you will need to partner with a member institution in order to apply for the funding. You can find member institutions using our member directory and searching your city. To find this member directory, please go to www.fhlbcin.com. Click on the link at the top of the page that's circled here on this slide that says who we are, and then click on the left-hand side where it's circled on this slide. That's called the members directory. Using this tool, will put you in touch with lenders in your area who are familiar with FHLB. Our members include banks, thrifts, credit unions, CDFIs, insurance companies, and other institutions who are chartered within Ohio, Kentucky, and Tennessee. All right, so as we delve into the Rise Up program, we'll start with a brief overview of the program guidelines and where members will be able to access any needed forms and information. So the basic guidelines, this program is a voluntary program, which means it is being put in place by FHLB Cincinnati because of a specific need that has been identified in our district for the program. It was also designed to work in tandem with proposed federal policies, such as the Build Back Better Act, to help bridge the gap for low and moderate income households. Rise Up in particular is to award grants of $25,000 to first-generation, first-time homebuyers to help combat the wealth gap that accrues between many of those whose families have owned a home and have benefited from home ownership and accruing generational wealth, and those whose families have not had this advantage. For households to qualify, they must meet both definitions listed on the slide presented here. The stipulations listed on this slide are in accordance with the first-time homebuyer definition described by HUD. Part of the process of applying for funds for Rise Up involves the homebuyer signing a self-certification to declare themselves a first-time, first-generation homebuyer per our definitions listed on this and the previous slide. When referring to any home, be it for first-time homebuyers or first-generation homebuyers, FHLB follows the definition set forth by HUD, which excludes any building not intended as a dwelling, mobile homes, which are different from manufactured homes, or any home not in compliance with local or model building codes as qualifying as a home, and therefore leaves homebuyers previously residing in these situations potentially eligible for this program, should they meet the rest of the criteria. This criteria also applies then to homes being purchased. If any prospective home purchase meets any of the criteria listed on this page, for example, a home buyer is trying to purchase a mobile home built before June 1976, they will not be eligible for this funding. Please note that mobile homes are those built before June 1976 and are not certified to be in compliance with all applicable federal construction and safety standards, where manufactured homes, on the other hand, can be in compliance and are built after June 1976. So just so everyone is on the same page, mobile homes do not qualify for this program if they are to be purchased, whereas manufactured homes can be purchased using Rise Up funds if they meet all of the criteria and regulations. The Rise Up program will be giving fixed grants of $25,000 to each household to be used for down payment assistance, principal reduction, and closing costs. In order to qualify for these funds, one must meet both the definition of first-time homebuyer and first-generation homebuyer, which was just defined on the previous slides. There must be a home identified that has a zip code within Franklin County, Ohio, and the total income for all parties who will be inhabiting the home must be less than or equal to 120% of the multifamily tax subsidy project income limit, which, for example, is $123,960 using the 2024 limits for a family of 4. These limits change by household size, so if it's a one-person household, that limit will be less. So when confirming if a household meets the guidelines, members should be sure to confirm the number of residents proposed to be living in the home in order to determine if the household is eligible for funding based on their income. There will also be resources on our website to assist any member in calculating income to ensure each household meets our guidelines. Moving on to the members' end, in the application package, there must be a signed loan application for the households that have been selected to receive the funding. This loan must still be open as the request is made, as funds will be dispersed so that they're present at closing. FHLB specific retention language must also be present in the deed or reference attachment, which will be verified in the request for funding that should be submitted 3 days before closing. Excuse me, that would be the request for the payment of funding. That would be the form in the package that will be submitted 3 days before closing. For those households qualifying using an FHA loan, the FHA requires specific retention language. Therefore, all requests using an FHA loan must submit the Rise Up retention language acknowledgement for FHA loans form. Households that are not qualifying under an FHA loan do not need to submit this form. Additionally, the full $25,000 grant must be used for either the down payment, closing costs, principal reduction, or a combination of any of the 3. There will be no cash back to the household at closing. In order for households to qualify, they must be approved based on the co-signers that intend to live at the residence. Co-borrowers who are non-occupants of the identified address are not permitted. The mortgages listed on the screen here are the only mortgage products that may be used with the Rise Up funding. The mortgage products listed on this screen may not be used with the Rise Up funding. The goal of the Rise Up program is to support eligible homebuyers in obtaining their first home. The loans listed here are more focused on rehabilitation of housing, which does not directly align with the goals of the program. Next, we will talk a little bit about the timeline for the program and the logistics for the interest rates of the mortgages. So the program will begin accepting reservation requests on May 27th at 8 a.m. Eastern Standard Time. There will be no closing date for the program. Homeport will be accepting reservations until all funds are allocated. That's also something different for this program. FHLB will not be the one accepting the applications. Homeport will be the administrator for the program. So all applications, all packages should be sent via email to Homeport, and their email will be provided later in the presentation. This is so that we can get all of our funds out as soon as possible to all of the households that need them. As mentioned earlier, this is a pilot program. We therefore cannot determine how quickly the funds will be reserved, so we do recommend households act quickly to secure their funding. So just to reiterate, there is no closing date. It is just until we run out of funding. On the member's end, for any application submitted for the program, the application must come from a member that has identified a household that meets all of the criteria I mentioned on the previous slides. The household must also qualify and originate their first mortgage with a member institution. Now, members, the first mortgage that is originating with you must have an interest rate less than 10.75%. If there is a second mortgage, that interest rate must not be more than 14.25%. These rates are standard for our Welcome Home and AHP program as well, but change every year per market fluctuations. As we just discussed, the member applying for the funds for the household must be the one to originate the first mortgage. However, the loan can close under another lender if the first mortgage is sold or assigned after closing. Mortgage brokers or other institutions who are not members of FHLB Cincinnati cannot originate the loans. Again, it is the member's job to reserve and request the funds. Now that you know the eligibility requirements and when you can apply, we're going to get into the nitty-gritty of the program and talk a little bit about the requirements for members and for home buyers. As I discussed at the beginning, this is a pilot program. So for now, we're only opening the program up to households in Franklin County, Ohio. The member bank does not have to be chartered in Franklin County, but just able to serve a household located within Franklin County. And that means the house to be purchased, the home to be purchased, the property to be purchased must be in Franklin County. It does not matter where the home buyers are previously located, as long as the home to be purchased is within Franklin County, Ohio. The program is open to all members to apply. As we discussed, it is a rolling program with no definite close date on the funds. This means, therefore, that the funds will be available on a first-come, first-served basis until all of the funds are reserved. In order to apply, the homebuyer must have an executed purchase contract in hand before the member can submit a reservation request. That is very important. Members must fill out a new reservation request for each specific homebuyer and property. As mentioned earlier, this program's goal is to assist families who are not normally able to afford a home due to down payment costs. Therefore, Rise Up is not intended to aid in purchases requiring significant repair or rehabilitation. If any funds are escrowed for repairs, they must originate from the seller or the buyer. These funds are not included in the $500 required contribution from homebuyers towards closing costs. Additional documentation may be needed if escrow is being held from the buyer. Members must certify that repairs were required for mortgage approval per documentation in the appraisal. The repairs have been completed, escrowed funds have either been dispersed or released, and that no funds were returned to the homebuyer if funds are escrowed for repairs. As discussed earlier, the objective of the Rise Up program is to provide down payment, closing costs, and principal reduction assistance to households meeting our criteria. If awarded, the funds cannot be used for any other purposes besides those three things. However, the funds can be used in tandem with other down payment assistance grants, not any other FHLB programs such as our Welcome Home program. So Rise Up funds cannot be used with Welcome Home funds. However, it can be used with other programs that Homeport is administering, such as the Maud Hill Fund. The multifamily tax subsidy project income limits for Franklin County are listed by household size in the table on this slide. The member applying for the funds must verify how many people will be residing in the house once purchased and what each of their incomes are for everyone aged 18 and older. It is the member's responsibility to calculate the household income and confirm that the income is less than that listed in this chart for the number of total people under and over 18 years old that plan to reside in the house. To receive the funding, homebuyers must contribute at least $500 of their own funds towards the down payment and closing costs. Costs such as hazard insurance, taxes, application fees, etc., also counts towards their goal. But this must be shown on the closing disclosure or other document provided at closing. All items paid outside of closing by the homebuyer count as part of the homebuyer's contribution and should therefore be shown on the closing disclosure. Funds received from other organizations, including local and state government agencies or the sellers, do not count towards the $500 required contribution. Households must take a homebuyer education course to be completed before closing in order to qualify for funding. Certification of completion of this course is required in the request for payment of funding, which we will discuss later in the presentation, but it is due 3 days before closing for Homeport to check for compliance before the funds are provided at closing. Now that we understand who can buy a home, we're going to discuss which homes can be bought. So eligible properties include 1 to 4 unit properties, as long as it is also used as the homebuyer's residence. Manufactured housing, as long as it is permanently affixed to the foundation and taxable as real property. And traditional detached single-family homes. All of those qualify to be purchased using Rise Up funds. And just to reiterate, this program is only for properties located in Franklin County, Ohio. Any properties in a census tract outside of Franklin County, no matter how close, will not be eligible. There will also be a 5-year retention period for any households receiving funding. As this program is meant to assist in building generational wealth, we want the home buyers to live in the house and benefit from home ownership. Therefore, if any property is sold within 5 years of receiving funding, FHLB will be notified per the restrictive covenant that will be a part of the deed or supporting document at time of closing, and the home buyers may be required to return some or all of the funding to FHLB, subject to our review. In all home purchases, the homebuyer must receive the full title. Rise Up funds cannot be used to initiate a lease purchase or land contract. Funds can, however, be used for new home construction, but not until the closing of the permanent loan or financing. So, how do you get the funds? Let's find out. To start the process, a homebuyer approaches a member institution and applies for a mortgage loan once a property to be purchased is identified. The member will then review the loan application and determine whether the household qualifies for a loan and whether they meet the eligibility requirements for Rise Up. If the member determines that both Rise Up requirements and the mortgage loan requirements are met, the member will obtain the documents for the request of reservation of funds from FHLB or from Homeport's website. Once completed, the member will send the completed request package with the checklist via email to Homeport. Homeport will then respond within 15 business days whether the household is approved, denied, or additional information is required. If additional information is required, the member must submit this before the household can be approved. If the household is approved, the member will then submit the request for payment of reserved funding, which includes the respective checklist, at least 3 days before closing for the property to Homeport via email. Homeport will review this package quickly to ensure compliance. For the request for payment of reserved funds, since the documents will be required before closing in order to verify compliance before funds are present at closing, the preliminary closing disclosures and deeds are acceptable. Once the request for payment of reserve funding is approved, Homeport will provide the grant funding to the closing agent and funds will be present at closing. For our members, please note that this is different than our Welcome Home program and that you will not be receiving the funds in your account with FHLB or being reimbursed for providing the funds upfront at closing. The grant will be provided to the closing agent, so the funds will be present at closing. The following slides will include many of the documents needed to apply for this program and where to find them. All of the forms for the request of reservation of funding and the request for payment of reserve funding can be found at our website, which is outlined on this slide. They are also present on Homeport's website, as they will be the administrator for the program and will be the first line of defense for any questions you may have. And both of those websites are outlined on this slide, so please check out those websites if you do have additional questions. To get all of our member information for the Rise Up program, you must first go to our website, which is www.fhlbcin.com. You're going to click on Housing Programs, which is outlined at the top there. And then you go down to the left-hand side and you click on the Rise Up program, which is also boxed on the left there. To get any of the documentation needed by the members and households to participate in the program, you'll next click on Rise Up Member Information, which is boxed here on the left. It will then take you to the Documents and Forms and Webinars and Presentations screen, shown on the right. All of the documents needed to be submitted with the request can be found here. It is important that you do not send any unnecessary information or documentation, as this will only slow down the review process. So please only send these forms unless otherwise instructed by Homeport. When submitting either a request for a reservation of funds or a request for payment of reserve funds, there are two respective checklists, one that goes with each request. It is imperative that members submit these checklists completed with each request and ensure that all necessary documents noted on the respective checklists are included with the request. Any items listed on the checklist that are not necessary for all applications, just certain specific situations, are labeled as applicable on the checklist. For the reservation of funds checklist, for example, multifamily units and the manufactured home line items on the reservation of funds checklist are each only applicable to very specific scenarios and will most likely not be checked for the majority of applications. Also on the reservation of funds checklist, the income verification documentation checkbox should be checked, but the subcategories will only be checked depending on which applies to each specific application. For the request for payment of reserve funding checklist, the closing disclosure and all sub-bullets must be checked. The deed bullet and the first sub-bullet must also be checked for all applications, but the sub-bullet and the FHA loans bullet should only be checked as applicable. All applications are requiring at least one homebuyer to complete a homebuyer education course. Therefore, all applications should have the homebuyer education certificate bullet checked and provided within the package for proof of completion of the certificate, and that's for the request for payment of reserve funding. For income documentation, this should be provided for all people who will be residing in the household who are 18 years of age or older. If anyone residing in the house will not have any source of income to document, then the certification of zero income form should be completed and signed by that individual. Otherwise, this form would not be required for every application. Only those who have household members who are unemployed and do not have any income. Once the request for a reservation of funding or payment of reserve funding is submitted, members should allow Homeport 15 business days to process their request. If Homeport determines that the request is lacking sufficient information, a request for additional information email will be sent to the member contact. The request cannot be processed until all of the needed information is provided. All requests and additional information packages should be sent to Homeport via email at the email listed on this screen at the bottom there. On this slide here is the retention language form. The language on this form must be included in the body of the deed or as a reference attachment exhibit. Changes to the retention language are not permitted. If the deed has already been recorded without the retention language mentioned on the previous slide, a declaration of restrictive covenants can be used to add or correct the retention language. A sample of this can be found on our website. Oh, excuse me. Okay, sorry about that. All right, so here is an example of the, or not an example, here is a picture of our FHA retention language acknowledgement form. And like I said earlier, this form is not required for every application, just those who are using an FHA loan. This form can be found on our website. And it should not be recorded in the deed, and it must be included in the endorsement package sent to HUD. So in preparation for the loan closing, every member and closing agent should review the instructions for closing agent's form, which is also located on our website. It is important to note that these are instructions only and should not be recorded with the mortgage or the deed. So this form is also found on our website. And the income and affordability workbook. This workbook can be used to determine eligibility by program for program applicants. If a member is unsure if a household qualifies per our income requirements, this workbook can be very useful. An instruction page is also included for assistance in the workbook. All right, now we will talk about the reservation request. Each reservation request is for a specific household. Therefore, a request should not be submitted until a household is identified who meets FHLB Rise Up eligibility requirements and has a signed, fully executed loan application. The documents listed on this slide are the documents that need to be submitted in the most common case scenarios. It is possible that based on the homebuyer's specific situation, additional documents could be required, which will be confirmed during the approval of the reservation request. Members must submit the reservation of funds checklist, which was mentioned earlier, and certify which documents are provided in the request. This should also be used to help assure members which documents are needed in the request. As stated earlier, please allow 15 business days for Homeport to process the request and send an acceptance, denial, or request for additional information email. By submitting any of the listed documentation on this slide, you will be slowing down the application process by causing Homeport to look through additional information that is not needed. If you have any questions as to which specific information you should be submitting, please email Homeport at their email dpa@homeportohio.org. After your request for reservation of funding is approved, members then need to submit a request for payment of reserve funding to Homeport via email. Homeport will prioritize reviewing the request for payment of reserve funding to ensure that all documentation is in place for the household to receive the reserve funding at closing. This request should be submitted 3 days before closing to allow adequate time for review. Again, members must submit the respective checklist to disclose which documents are being provided in the request and to help the member in ensuring all needed certifications are being submitted in order to not delay the processing of the package. Some documentation, such as the FHA retention language form, as we've mentioned before, will not be required for all applications, so please review each package carefully. Different from our Welcome Home program, the closing disclosure submitted for the Rise Up request for payment of reserve funding will be unsigned since it is being provided before closing, but should be in its final version that will be present at closing. This flyer here can be found on our website under the Homebuyer Information section and can help inform households if they would qualify for the program. Members may provide this flyer to their customers or make their own to advertise the program using the details provided. There are also additional forms in English and Spanish under the Members Information section on our website as well. In the unfortunate event that repayment of the Rise Up funds is required, so there are a few situations where the need for repayment could occur. In order for FHLB to determine if funds will need to be repaid, and if so, how much, FHLB must be given notice. If the property purchased using the Rise Up funds is sold or refinanced within the 5-year retention period, the new lender or closing agent should complete the subsidy payoff request form found on our website and sent to the email listed on this slide. If there are any questions on whether the funds will need to be repaid, please reach out to FHLB per the same email. So for any repayment of funds, please do not reach out to Homeport. FHLB will be handling those specific cases. Once the funds are provided at closing, the member has no responsibility to monitor the home buyer or property for compliance during the 5-year retention period. Only in the case of the original member providing the new financing during the sale of a rise-up property should the original member reach out to FHLB regarding the retention. Here is a picture of the subsidy payoff request form for reference. Other situations where recapture could be required includes if a homebuyer is determined to have falsified information in the application and or does not actually qualify for the program per the program parameters. Again, if the 5-year retention is violated, this could also warrant a recapture of funds. However, once FHLB is notified and the calculated recapture is $2,500 or less, no recapture is due. However, this is up to the discretion of FHLB. All right, who are you going to call if you need help? So we're going to be emailing Homeport. So all reservation requests and requests for payment of funds, in addition to any questions, should be directed to our program administrator, dpa@homeportohio.org. So thank you guys. And if you have any questions, you know who to reach out to.